Unlocking wealth. The magic of compound interest. Have you ever wondered how some people seem to grow their wealth effortlessly? They buy real estate, invest in stocks, and retire early while others are stuck in the paycheck-to-paycheck grind? It all comes down to understanding one crucial concept: compound interest. Compound interest is like the secret sauce of personal finance. It's the engine that can turn your small savings today into a massive pile of wealth over time. And the best part? You don't need to be a Wall Street whiz or inherit a fortune to make it work for you. Oh, and make sure you stick around until the end, because I'm going to share a little-known trick called the Rule of 72 that will blow your mind. It's a simple way to calculate how fast you can double your money with compound interest. Okay, let's start with the basics. What exactly is compound interest? In the simplest terms, compound interest is interest earned on top of interest. Imagine you invest $1,000 in a savings account that pays a 5% annual interest rate. After the first year, you earn $50 in interest. Here's where the magic happens. In the second year, you earn 5% interest on the original $1,000 and the $50 interest you earned in the first year. As you continue to reinvest your earnings and let the interest compound year after year, the amount of money you earn grows exponentially. Without lifting a finger, your investment would grow to over $4,300 in 30 years at a 5% interest rate. Now let's compare simple interest versus compound interest. Imagine you have two friends, Sarah and Mike. Both inherit $10,000 and invest it for 10 years at a 5% interest rate. Sarah chooses an account with simple interest, earning $500 annually. After 10 years, she'll have earned a total of $5,000 in interest. Mike opts for an account with compound interest, earning interest on his initial investment plus any interest earned previously. After 10 years, Mike's investment will have grown to over $16,000. That's over $6,000 more than Sarah, even though they started with the same amount and the same interest rate. This simple example highlights the incredible difference between simple and compound interest over time. Now for that mind-blowing trick I promised, the Rule of 72. This is a quick and easy way to estimate how long it takes for your investment to double using the power of compound interest. Just divide 72 by the annual interest rate of your investment. For example, with an average annual return of 7%, divide 72 by 7, and you get approximately 10.3 years. This means it would take roughly 10.3 years for your investment to double at a 7% interest rate. The Rule of 72 is a powerful tool that helps you visualize the impact of compound interest and make informed investment decisions. Now, you might be wondering, what are the best ways to invest for compound interest? One popular option, especially for beginners, is investing in low-cost index funds. Index funds are like baskets of stocks that track a specific market index, such as the S&P 500. They offer instant diversification and have historically generated solid returns over the long term. Another option is investing in real estate. You can start small with a rental property, or even invest passively through crowdfunding platforms. Real estate can provide both rental income and appreciation, making it a powerful wealth-building tool. The key is to do your research, understand your risk tolerance, and choose investments that align with your financial goals. But here's where most people make mistakes and miss out on the true power of compound interest. They start late, invest inconsistently, or try to time the market. One of the biggest mistakes is waiting too long to start investing. Even if you can only invest a small amount each month, starting early can make a huge difference in the long run. Another mistake is not reinvesting your earnings. When you reinvest your dividends, interest, and capital gains, you're essentially putting your money on autopilot. And finally, avoid trying to time the market. Instead, focus on investing consistently over time. This strategy, known as dollar-cost averaging, helps you buy more shares when prices are low and fewer shares when prices are high, reducing your overall risk. So, are you ready to unlock the incredible power of compound interest and watch your wealth grow? Remember, you don't need to be a financial expert or have a ton of money to get started. The most important step is to simply start. Open an investment account with a reputable brokerage like Vanguard, Fidelity, or Robinhood. Start small, even if it's just $50 or $100 a month, and be consistent. The sooner you start and the more consistent you are, the more wealth you'll accumulate over time.